Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. And I want to thank you for joining that mission today. In fact, I want to specifically thank people in California, San Diego, LA, San Francisco, but particularly San Diego, for joining that mission today. So, fellow risk takers, this is your worst podcast host, Andrew Stotts from A Stotts Academy, and I'm here with featured guest Craig Cecilio. Craig, are you ready to join the mission?
Oh yeah, without a doubt.
It's a fun mission. Let me introduce you to the audience. Craig is a visionary disruptor and CEO of DiversyFund, dedicated to democratizing wealth building. He has broken barriers in private markets, raising over $1 billion and offering investment opportunities once reserved for the elite. Craig empowers others to reclaim financial control and make meaningful, lasting impact. Craig, take a minute and tell us about the unique value you are bringing to this wonderful world.
Well, I got a lot of transactional experience, so I built that up over years of doing work. So I have a lot of great stories, great lessons. I could share that and help people who are new, who have done it before. We could share kind of war stories together, or someone who's just beginning.
Mm,
A few market cycles as well, and good times and bad times. I'm doing both.
yeah. So tell us a little bit about what you guys are doing so I understand your business.
Yeah, I mean, first of all, what we're doing is a gargantuan project is really opening up private markets to everyone. So, kind of how Robinhood took the stocks and fractionalized it and made it really
Mm,
accessible and easy for everyone. So you could buy like a higher dollar amount stock, like let's put Bitcoin today is like $100,000, right, per coin, and you could still buy it for like $1,000 or fractional through Robinhood. We've done the same with private market investing, and it's a little different type of investing. It's a little bit more for people who are a little bit more in the financial journey, a little bit more concerned about their future, growing wealth, maybe had kids already, understand it. However, it's something that the the establishment, I call it, has all the access to. The everyday person doesn't really understand it, how it works, and they don't understand that because all the people in the industry, and I can say all the players in that game, aren't they can't benefit from the everyday person doing it, so they're not going to really share that knowledge with them. And this is where the wealth is made. This is where the money is made in good times and bad. You always hear all these hedge funds making all the money, all these institutions making money. This is how they do it. And now we're trying to democratize that and give access to everyone.
so you're creating funds that have assets inside those funds that the average Joe can get access to. Is that how it works?
Yeah, yeah.
And how many funds do you have?
Four funds. Always open up a fund. Probably this year we'll have a couple more opened up with that stuff. Right now, a lot of anxiety, a lot of uncertainty. I'm a contrarian. That's when I
Mm,
like to invest. So I'm like, hey, and what's less in here is the general public fears. The retail investor is motivated by emotion and fear, so they're running away from things, and they should be diving into things. And this is a lesson that we're teaching. This is one of the biggest things we have to do is educate. So we're almost like I feel like we're going to be an educational platform. So we have to educate people. Is the establishment, the wealthy, they're very patient and they wait and they know when to kind of boom, they know when to act, and the everyday person moves on that emotion too much, and they're always kind of missing out because of that. They do
mm.
get you do get lucky at sometimes, right? You do get lucky at sometimes. So that's an exception, though. Look at the numbers, look at the data. And right now in this country, we have a crisis. The middle class is vanishing. It's vanishing. It is going away, and I don't know
Amazing.
if it's going to get better. Yeah, home ownership is could be gone for most people.
Mm. So let's talk about let's just imagine an average investor. Let's say they're 50 years old. They've built up a portfolio of, let's just keep it simple and say that they owned an index fund and they're owning the whole stock market. They got $1 million in that and they're happy with that for the next 20, 30 years. They don't want to think too much. And then they come across you and you say, well, I've got four funds that could be interesting. maybe this one more than that one or whatever. And here's a reason why you should add one of these funds. It may be only 10% of your overall portfolio, but here's the reason why. What would you say is the main benefit he's going to get from that, or she's going to get from that?
Diversification.
Mm-hmm.
It's one like at the name DiversyFund from diversification is, and again, I like what you said with 10%. That's a good benchmark. Some cases I look at 5% in some of these things and maybe do multiple funds and maybe, okay, where am I in my journey? Maybe I want to be in alternatives up to 20 to 30%. It's an individual opinion. You got to look at it holistically. And then maybe I go into 4 funds at 5% each to do 20%. That's just my opinion. I'm not
Mm-hmm.
really giving financial advice here,
Yep.
but I like 1 out of 20. That's kind of the way I look at things personally.
And what do you say to the guy when he says, well, don't I have real estate exposure when I'm investing in an index fund? I'm buying all these REITs. Is this just REITs?
I love that. So what I love, the best tool we have today is like open chat GPT.
Mm,
You could just go right there for your information in literally seconds to get it. So traditionally, the asset class we have performs 12 to 15%. Don't ask me, ask chat. We'll spit it out and give you all. We'll aggregate all those resources where it comes from. And you're looking at holistically again over 5 to 10 year time periods, not these little windows that everyone likes to market. And
mm,
you know how that is. You're in an investment world. You could have a great investment, you get a tombstone and advertise that, but that's not really how it works. Everyone kind of has a winner, but they're not totally looking at everything from a holistic point of view. It's like, let's look how this does over markets, over decades. And that's the way you have to be a practical investor. There's the optimistic investor, right? But there's practical investors, the way I like to go more. Look at the data.
mm. So what you've explained, I mean, diversification is one thing. The second thing is the idea of the return, that it's possible that I could get a higher
Yeah.
return by investing in this asset class. And just so that the listener and the viewer understands that this is not necessarily what you would get in the stock market. What are the typical assets in your funds? Commercial, residential? Are they different? Are they different in maturity? How do they look?
Well, I'll go for the standard one. There's
Yep.
always exceptions. I could talk about exceptions all day long, these home runs, but let's go right in the standard. Our standard is more value add, multifamily real estate around 2 to 400 units, something that's institutional grade. The purchase price is around 25 to $50 million. The everyday person, even if you have $1 million, it's hard to penetrate that because you
Mm,
need close to $10 million of equity to buy those assets. So it's something that not a lot of people have access to. And for us, since you have that purchase power with more money, you can play that game is a good way to put it. You can get those assets at a discount. Again, the industry insiders only deal with the people who have the money because they're incentivized by what? Not by you. They don't serve you. They serve who? Their checks. It's say commission cents. And so if you go to them, they're not going to talk to you. Hey, even if you have $1 million, they might make, okay, I may make 10, 20,000. But if you have 50 million, 100 million, a billion, they're going to start sending you all their off market stuff.
mm.
That's just how the game is played. And that's what people have to understand. This is the game. And to benefit from it, how can you benefit it? Now I have a tool where you can benefit from it.
And one last thing, I think now we understand what you're doing. The last thing is that, you mentioned a little bit about the middle class and what's happening. I left America 32 years ago, so I really have no idea what's going on there. But maybe you can give a picture of what you think is happening in the real estate market for the next, I don't know, 3 to 5 years or something like that. Where are we at in the cycle? What are the pressures up and down?
It's all over the place. I think you have to dig into which asset class within that itself. Right now, we're not really building new homes. Interest rates are double. Prices went up double. So that means 4x to get a
Mm,
payment on the same home. You're looking at taxes in certain areas, very tough for construction costs are through the roof. And people are locked in these low rates, so they're not incentivized to leave a 3% rate and then buy a home with a 6% rate. So you have this whole uneven, balanced situation. And so people need a place to live. And then also at the same time, I think we have to look again holistically and look what's going to happen with the immigration policies. Are we going to have more people come into this country? And if that does happen, now they need to live somewhere. And so that's why I always look at apartments. Hey, can't afford a home. I can live in an apartment. More people are coming in this country. They need a place to live. And then where are they going to go? They're going to go into apartments. And that's why I
Mm.
feel it's a safe asset class.
And there's a great book called Hidden in Plain Sight that explains some of the origins of the 2007 boom and bust. And part of it, he goes back to 2000 or so with Bush and later Clinton, basically pushing Fannie Mae and Freddie Mac, the secondary, market mortgage companies, pushing them to have lower and lower quality, a higher amount of lower and lower quality loans. And when those loan quality, when it went from maybe 20% of their overall portfolio at Fannie Mae or Freddie Mac, when it went from 20% to, let's say, 40 or 50%, all of a sudden things changed. And one of the big changes was, well, they gave access to millions of people that didn't have access to the market. So
Yeah.
immediately, millions of people were able to get these loans because Fannie Mae and Freddie Mac would buy them off the banks, easily. And then those people would then enter the market. And so there was a huge surge in demand. And so my question is, there's talk, for instance, from the Trump administration that there's going to be mass deportations. If that happens, does that affect the property market, or is that not really, is it not that significant for the residential?
We'll see what's going to happen. There's a lot of fluff out there, really. What's the reality of the situation? Because now being in office is different than trying to be in office. Now he's in
Mm,
office. Let's see what actually does happen. With that, everything is cause and effect,
yeah.
right? But all these people come in the country, where they go, right? I don't know where they go at the end of the day, and are if you're kind of thinking about it, if the right people are coming to this country, someone needs to fill the jobs that people don't
Mm,
want to do because there's jobs out there that people don't want to do no more, and we get taxes off of them. So that's good as long as we're not kind of paying for them all the time with government subsidies. And I think that's more the concern is we're paying them and paying their living and everything come in the country. But they come and get assimilated in the workforce in the right manner, it could be a positive thing. And that's where we don't really have that conversation. It's more like it's polarized. Don't come in or come in, right? Let's talk about well, what's a positive? Positive, you come in the right way, you become citizens, you get jobs, you get taxed, you absorb some of the housing, right?
mm,
That could be a positive thing. So we'll see where it goes. To send and push all these people back, I don't know if that's really a reality because how are you going to run around the whole country? You're going to be just kind of think the visual in your head right now. You got
mm,
these people in these police outfits knocking down doors because they go from the border up to like New York and Minnesota. I was in Minnesota. I've never been to Minnesota before, and they're up. They have a problem with that too. So I don't see that really being a plausible solution. Is to
mm.
round them all up. Are we gonna have like helicopters come down and SWAT in the middle of the night? I don't know what's gonna happen there. But I
So,
also see the point there that if there is a shortage of supply and demand at the end of the day, that
mm,
but I don't think it's going to be that big of an issue.
yeah. All right. Well, now it's time to share your worst investment ever. And since no one goes into their worst investment thinking it will be, tell us a bit about the circumstances leading up to it and then tell us your story.
Yeah, I mean, there's a couple that come to mind. There's been a few in life. You always have to endure that. It's part of, I said, the process of developing yourself. And I had a potential business partner, and we were doing this land deal. He always liked to chase these big deals, and he was always chasing big deals. And I was like, I'm a singles hitter, but I like massive singles. So I was always more a Clydesdale horse, right? And I'm like, okay, let me just throw 10 grand at this. It's just 10 grand because I'll feel comfortable. And finally, I wired the money over, and lo and behold, I think we had a couple other people. It was about 250,000, which is a deposit into a land development deal in New
Mm,
Mexico. And then like a week went by, and then nothing. We got ghosted by the person. I kind of leaned into it. I ran around the banks and started understanding how wires worked and what happened because there was a little bit back and forth. Didn't receive your wire. Yeah, you received my wire at the end of the day. So I lost 10 grand. Some other people lost some money on the deal. So that was a big thing about it. And then it started me questioning this potential business partner of his. How can he read people? Because as I dug into the circumstances and the paperwork, there was this basic stuff that was missed, basic due diligence items that were like, I have this whole checklist of underwriting stuff and just one-on-one stuff if you know how to underwrite some of this stuff. And I was like, oh, so it was like double whammy for me. It was like, one, it was just the money, and two, it was the person.
Mm.
So it was it was a pretty it was a good lesson. A little expensive, didn't hurt me too hard, but I wasn't happy about the whole thing. And the bigger, I think, loss for me was the loss of that potential partner and the trust and faith of him underwriting things. So then I had to sever that relationship as well.
So how would you describe the lessons that you learned?
Um, Well, one is kind of like I know how to underwrite, so it's more make sure I'm gonna make sure those boxes get checked, ask those questions a little bit more. That was the big thing, and then also, and this is a big one too, and this is something that's a repeat pattern for me. He was referred to me by a friend, not a business associate. And there's a thing I have in life is friends in business aren't kind of really connected. Whereas if I respected you, Andrew, in business, you referred me someone, I
Mm.
would take that different than a friend who I socialize with who's refers me someone. So there's a difference between the two. That was a lesson there as well.
I remember a friend of mine always said, friends are the worst when it comes to
I know what he
business.
means.
Yeah.
Yeah, I know what he means because
Yeah.
you let your guard down. You don't go that whole list. You go,
Yeah.
maybe it's 1 to 10. You jump to like 8 or 9. Okay. So
Yeah.
yeah.
In fact, it reminded me recently I got scammed. Despite the fact that I'm the host of my worst investment ever, I've heard every scam and everything. Basically, we signed up for a membership to a particular group, and it wasn't a big amount, but they sent us an email and said, "Here's the bank to transfer it to," and so we, transferred the money, and we called them and talked to them, and they said we didn't receive anything. And I was like, "Wait, what?" Well, a scammer had come in between us, intercepted our communications, had come up with an email address that was that company's name with a one at the end of the email address or something like that, and
Yeah.
impersonated them and put their bank details in the middle. And so we transferred it to that person or entity's bank, which we immediately, submitted a police report here in Thailand, and then tried to, go to the bank to get that back, but it was already gone and we couldn't. So, but that was, something similar that I transferred money. And now I realize, like, you really, before you transfer anything, you've got to really stop and go through a checklist to make sure that you're really sure what you're doing, because you've got to assume that once it's gone, it's gone.
There is something going on with my business. Every time a new employee starts, someone texts them saying they're me and asks them to get like an Apple gift card or something. And it's funny because not most people just ignore it. But a couple people didn't, and they ran around town. And I'm like, I don't just walk in my office. I'm not asking for gift cards, but they got a couple of people with it. But the thing, it's always happening. They get creative with things, so they
Yeah.
know when I hire someone new and they hit them right away before that relationship forms, right? They don't know how you communicate to your new boss, and they're just like, "Oh, the new boss wants a gift card." I'm like, "Oh, it's like." It's almost funny. It's laughable to me because it's
Yeah.
happened so many times. So maybe I got to put that in my onboarding documents. If the CEO texts you to get him a gift card, it's fraud.
Yeah.
Yeah.
I will never text you. Just come to my office. So, based on what you learned from this story and what you continue to learn, what's one action that you recommend? Think about a person that's just about to do what you just did. What would you, suggest that they do to avoid suffering the same fate?
You got to do your due diligence at the end of the day. Really do your due diligence on all the parties involved in the transaction. I think it starts with like where did it come from? So if it sounds too good to be true, oh God, I hate saying this.
Mm.
That sounds like my dad here, and I promise this on every like if it sounds too good to be true, just do your due diligence. I have this book; it's right on my shelf here, and this is for investing. It says assume everybody is a crook and work backwards, and that's the key to underwriting and any investment. Just assume that, and you should be okay.
Yeah,
I didn't say it; it's from the book.
yeah, that reminds me of a statement. It was attributed to a man named Dr. Deming, but it may not have come from him directly, but I know he said it, which was, trust in God, all others bring evidence. Yes.
but That's a good one too, because when I have like this little checklist, if someone puts trust in God in their signature, I have a red flag that goes up because I don't know why that is. Because a lot of the stuff comes from the I don't want to say cults, but they do come from a lot of these groups that they
Mm,
target you based on if you're hey, I could use they use God, they
yeah,
use religion for a
that's
way to
crazy.
infiltrate fraud. It's a high incidence of it. Yeah,
Mm,
it is crazy, but it's the data, and you got to follow the data.
yeah. So what's maybe you can share like a resource either of yours or a resource that you've used over the years, a book, an activity, a habit, or something that you provide through your business that you can share with the listeners.
Oh, activities, books, a lot of things at the end of the day. So I've done this for like a while, raising capital for over 25 years. So I just started to do courses, online courses. So I
Mm,
launched that next month. So check that out. It's CXC is my initials. So that's my handle, my social handle. So it'll
hmm.
be out there for people to do it. And I actually wrote my first book, and I'm publishing it in a couple months. So I'm really excited about that, and it's called "You Know What You Got to Do," and that's named after my mom through childhood. Every time I faced adversity, her advice to me was, "You know what you got to do." To this day, she'll say that when they hit a tough time, "You know what you got to do." So it's the title of the book, and it's a bunch of stories of from me, from my journey and how I got to where I am today, facing adversity.
Mm, interesting. Well, we'll have links to all that in our show notes, so we can go out and then update me when you get the link on the book, and I'll put it in there.
Yeah, I will definitely. I'm getting close. Yeah, I'm
Yeah,
excited.
I know the challenge. I've written about four or five books, and it's painful. I'm not
Yeah,
a
I
I'm
just
as I say, I'm uh I'm an author, not a writer, which basically means that writing is painful for me, but for some people, writing is joyful. They're writers. So, last question. What's your number one goal for the next 12 months?
Oh, the next one. That is a great question. Mine is to
And we're at the
take,
right time of the year to ask this question.
yeah, my and it's a good question because I'm always goal set right now is one, the launch the courses, of course. Two is a little bit of how I run this organization, Diversity Fund, how we're going to put it on the map. We like for it to be a public name. We are doing something for people. You don't go out and create a funds for the everyday American and do it really about the money. It's about the
Mm,
purpose and really make
mm.
ourselves a household name that we are actually helping you by doing this. We're giving you an opportunity here. At the least, we're giving you awareness this exists and maybe put you in a path so you could do some research yourself and benefit from it.
Great. Well, listeners, there you have it. Another story of loss to keep you winning. Remember, I'm on a mission to help 1 million people reduce risk in their lives. As we conclude, Craig, I want to thank you again for joining the mission. And on behalf of A Stotts Academy, I hereby award you alumni status for turning your worst investment ever into your best teaching moment. Do you have any parting words for the audience?
What I say about investing, just get started. Just lean into it and get started. Take the first step. Read about it. You got so many tools at your hand. There's more tools than the history of the world. So just get started.
Yeah, it's remarkable. And that's a wrap on another great story to help us create, grow, and protect our wealth. Fellow risk takers, let's celebrate that today we added one more person to our mission to help 1 million people reduce risk in their lives. This is your worst podcast host, Andrew Stotts, saying, I'll see you on the upside.